Now, our correspondent Karishma Vaswani is in Singapore because the markets have taken a turn following these dramatic developments. Karishma, just bring us up to date with what the Asians thought of all this.
Well, Clive, across Asia today, we saw a sea of red on Asian markets, all the major markets falling dramatically at one point. Most of them have closed, but now we've got the Bombay markets in India still open, still down about 1.2%. They started the day lower, down about 3%. It's not just stocks across Asia. You've also seen a real flight to safety in terms of currencies out here. The Japanese yen, which is often seen as a sort of safe haven amongst investors in Asia, that's been rising against the US dollar. Remember, that's bad for Japanese stock markets because exporters in Japan want their products to be cheaper overseas. So when the yen rises, it's not good for their goods overseas. We've also seen the Mexican peso, which was seen as a proxy for much of the election sentiment over the last couple of months. That fell by 10% and more at one point during Asian trade. A number of central banks and governments in the region have come out and said that they need to reevaluate what this volatility means for their countries and are meeting as we speak, some of them, to figure out what the next steps are, what the Trump presidency means for Asia in the long term.
OK, Karishma, thanks for that. Karishma Vaswani there in Singapore. Let's get to the view from London. Aaron Hazelhurst is in the city there for us. Aaron, what's the FTSE doing?
Clive, the FTSE's down, but not as much as one expected. Yeah, hello from the City of London. I'm on the trading floor of Aberdeen Asset Management with our trading friends here. And look, you know, this whole market business, I tell you what, it's a little fickle. It's a little fickle because it does appear that the very first speech by President Trump has had somewhat of a calming effect on the markets. In fact, some suggesting he sounded more presidential than he's ever done during the election campaign, perhaps more establishment, less maverick. I say a bit of a surprise with the FTSE down, because in the early hours of this morning, during after hours of futures trading, the FTSE was down more than 5.5% at one point. But it certainly has clawed that back. And of course, look, it was Asia. You just heard from Karishma. Asia certainly taking the brunt of those falls, but we could see corrections tomorrow. Look, let's find out, because I'm in front of the Bloomberg terminals and I've got Ben Ritchie, who is Senior Fund Manager, joining us. Ben, good to see you. It is a fickle game you guys working. I'm just wondering, is this the markets thinking, hang on, he may not be as bad a president as we originally thought just less than 24 hours ago?
Well, I think you've got to divorce Trump from your personal opinions about his domestic policies and what might actually happen to both the US and the global economy. And those might be two rather different things, despite some of his rather more distasteful political statements over recent months.
There's a lot of uncertainty, right? And now with President Trump, many will say that there is huge uncertainty around the globe. We always use that expression, markets hate uncertainty. But so why aren't we seeing, though, bigger falls on the FTSE?
Yeah, I think there are two sides to it. I think if you step back for a minute and take away the Trump factor, you've got a Republican president, a Republican Senate, a Republican Congress, and a Republican Supreme Court.
They can pretty much do everything they want.
Well, but I think in that basis, most people would generally see that as quite positive for markets. And if you took away the name Trump and put another name there, you'd probably be sitting there and saying, well, actually, we'd expect to see equity markets moving ahead. If you look at Trump's domestic agenda, it's cutting taxes, it's investing in infrastructure, and I think people will probably take that quite positively. It's what he's going to do overseas in terms of trade deals, putting up barriers and trying to rip up globalization that I think really worries people.
Which is probably the big reason that we saw the sea of red. I don't know if you can see that there, the sea of red in Asia, right? Can I ask you this? What could this mean, given what we're seeing with the markets, currencies around there, what could this mean for that supposed rate rise decision in December? There was a big expectation that was going to happen in a couple of weeks.
Yeah, I think certainly it will go back, I think, into a sense of consideration again. But I don't necessarily think that this will affect what's going on in the US domestic economy. And I think that will be the main driver of what we see the decision there. I think there's been a lot of spending that have been deferred in the run-up to this. A lot of CEOs of large US corporations who just didn't want to make decisions. I don't think they were scared of Donald Trump being elected. They just didn't want to make any decisions ahead of an election. And I think we'll probably see that start to sort of unwind and start to see some decisions in the economy start to move a little bit more as we move through the rest of the year. So I wouldn't be surprised actually to see that rate rise continue just as we might have expected before.
Okay, Ben Ritchie, thanks very much. We much appreciate that. And that's it, Clive. Certainly I'll be down here all day. Plenty of action from Aberdeen Asset Management and the trading floor. We're going to keep across all the global markets.
Okay, Aaron Hazelhurst live at the city there. Thanks, Aaron.